And in our top business story, Dubai hotels saw occupancy rates jump back to normal in August following a month affected by Ramadan, according to new data released by STR Global. The company's preliminary August data for Dubai also indicated negative revenue per available room and average daily rate performance caused by the Eid holiday. Dubai reported increases in supply up 8.6% and demand up 10.9% during the month, while occupancy rose 2.1% to 75.1% compared to the same month last year. Hotels in the Emirate, however, also saw a 5.7% decrease in ADR to 682 dirhams 21 and a 3.7% decline in RevPAR to 512 dirhams 25. Last month, it was announced that Dubai's hotels welcomed more than 5.8 million tourists in the first half of 2014, the highest number of visitors ever achieved in the first 6 months of the year. The statistics released by Dubai's Department of Tourism and Commerce Marketing showed increases across key indicators, including hotel establishment guests, hotel and hotel apartment room revenues, F&B revenue, and average length of stay. The GCC's gross Takaful contribution is estimated to reach around $8.9 billion in 2014, up from an estimated $7.9 billion in 2013, according to the Ernst & Young report Global Takaful Insights 2014. The report forecasts a continued double-digit growth momentum of the global Takaful market of approximately 14% from 2013 to 2016 and expects the industry to reach $20 billion by 2017. This is against a backdrop of continued buoyancy in the estimated $2 trillion global Islamic finance markets, with the GCC and ASEAN markets likely to maintain their current growth path in the next 5 years. Within the Gulf region, Saudi Arabia accounts for the majority of the total gross Takaful contribution at 77%, followed by UAE, which accounts for 15%. The rest of the Gulf countries account for just 8% of gross Takaful contributions. Saudi Arabia will likely remain the core market of Islamic insurance business, commanding approximately 48% of the global contributions, while the UAE, Qatar and more recently Oman continue to set the pace for the development of Takaful products in the Middle East and West Asian markets. Forbes Middle East has announced the list of 200 most powerful women in the Arab world, and the UAE has topped the list in 2 of the 3 main categories. As per the list, Her Excellency Sheikha Lubna Al Qasimi, the UAE Minister for International Cooperation and Development, was ranked as the most powerful woman in government in the Arab world. A total of 26 women from the UAE are featured on the list of 200 most powerful women across the 3 main categories, which include government, family business and executive management. The UAE had also dominated the family business category, with Raja Isa Al Ghurg, the managing director of Isa Saleh Al Ghurg Group, securing the top rank. Also featuring on the list from the UAE were prominent business women, including Amna bin Hendi, the CEO of bin Hendi Enterprises, and Fatima Al Jaber, the COO of Al Jaber Group. 85 of the top 200 powerful women were from family businesses, which was also recognized as an area where women were likely to rise in prominence. According to a representative from Forbes Middle East, the ranking illustrates the increasing participation of Arab women in the workforce and highlights their achievements and potential.
I think it really reflects the family spirit that is here in the UAE and across the region. Women in family business are encouraged to pursue their interests and to work their way up the corporate ladder and the business ladder, and that is reflected very well in the rankings. They're not just influencing their female peers, but they're also having a huge influence in national policies, in the economy and government. So it's really exciting to see women in these positions.
The US dollar gained a further 0.5% in trading last week as the risk-off sentiment dominated proceedings. The British pound found itself under selling pressure as doubts of Scotland's participation in the UK were raised, threatening a breakup of the union and putting the pound in doubt. So with the Scottish referendum due up in 3 days' time, market conditions are expected to remain volatile. To talk more about this, we earlier spoke to Gaurav Kashyap, the head of futures at Al Pari Middle East, to get his views on the week ahead.
Well, we've seen markets kick off this Monday with a risk-off mood. We've seen higher-yielding assets selling off in favor of the US dollar. Now, this was largely because of an industrial output number that we've seen from China, which dropped to its lowest levels since December 2008. So this had a very, very big impact on the Australian dollar, which slipped below 0.9 against the US dollar for the first time since March of this year. Now, we're seeing the Aussie dollar consolidate between 0.9 levels, but overall the trend is slightly on the down for the Australian dollar. Looking at the week ahead, we do have a very, very big event on Wednesday. The US inflation data expected to come in at 1.9%, as well as the FOMC rate decision expected to be unchanged in terms of the interest rates, while the overall asset purchases will be further tapered to about 15 billion a month. But all eyes, of course, this week will be on Thursday's Scottish referendum to vote to stay in the UK or to disband from the UK. This will have tremendous volatility in the British pound in the week ahead. Overall, we're expecting it to be a very, very close vote. We could see downsides in the British pound to 158.50 levels against the US dollar, whereas if they vote to stay in, we could see further upsides in the GBP, which could open the door to 166 in the month ahead. But overall, it remains to be seen what the vote will be like, which is why we expect to stay out of the British pound in the week ahead. Only once we do have an idea of how the referendum is voted, it would make sense to take those positions. But overall, looking at the rest of the currencies, it's going to be a very, very dollar favorish week up ahead.